George of the jungle, strong as he can be.
Can I get a loan by verifying my assets only? Maybe. That's what we're going to discuss in thecreditjungle.com today. This is George Anderson. Thanks for joining. And believe it or not, this is really not what I would call a stated income loan or something like that. There are such things as asset verification loans, but you can also apply this to a conventional loan. So I'm going to talk a little bit about the differences between the two. So there are some banks, again, that are out there that have these non-QM loans that we're talking about. So this is kind of part 3 of 3 that we're going to be doing on this. So somebody who would technically be, say that they're unemployed, don't have a job, recently retired, don't have their pension yet, maybe are not collecting Social Security yet, but they have substantial assets, okay? There's programs out there that if somebody has, in addition to their down payment, in other words, after they've purchased the home, typically it's 25% down or more, got to have decent credit as well. We're looking at like 680 and above credit scores. There are some that will go a little bit lower, but again, you're paying a premium on the interest rate for some of this stuff. But if you have at least $500,000 of assets after the fact, and you have decent credit, and you've put down 25%, and this is your leftover money after you're doing it, we're done. Now, can the money just fly in there overnight? No, it has to be in there typically for 6 months. So we're going to look back at 6 months worth of bank statements or brokerage statements, whatever it is that you have. And if somebody's got a trading account or whatever and there's substantial assets in there, that can be used. So that is an option to be able to do that without verifying anything more than just the asset account itself and your credit. So that's an option on there. But you can actually do this with a conventional loan. Actually got a loan in process that's doing this right now. Got a retired gentleman. Does have some income sources and everything else, but the primary source of his income, at least for the past couple of years, has been taking some of his mandatory distributions out of a qualified retirement plan. Now that qualified plan has to have a minimum of 3 years worth of future distributions. In other words, you got to have a history, got to have at least a 12-month history. We prefer 24. So you have to have at least that history that money had been being withdrawn, and then you have to show that we have the asset, that the asset is still there, and that we still have 3 years at least of future distributions that at the pace of the previous years can continue, and taking that amount of money off of the previous year's distributions divided by, let's go by 24, that ended up being, say, 10 grand a month or whatever, well then we'd have to show that we've got at least $360,000 in the account, which would be 3 more years of distributions going forward. You can do that on a conventional loan with 5% down. So again, credit score requirements, DTI ratios, all the other stuff's in place. But those are some very interesting options for people who maybe don't have a lot of income but have substantial assets. So just another way to get people into home ownership, or even if they wanted to invest and get into investment property. These are great options for people. So remember, get Mortgage Professional. I would love to talk with you about your circumstances and help you get the best financing terms available. Thanks for coming into thecreditjungle.com. This is George Anderson. Have a great day.